Meet the Lot, native token of Lukki Exchange and the most potential tool for investing this year. Trade now on P2B, B2B and Lukki.io.
Vays, not going to spend a lot of time talking about myself. I come from former Wall Street, organized a couple of events, Unconfiscatable, Understanding Bitcoin. Unconfiscatable is in Vegas, Understanding Bitcoin is in Malta. Check out the YouTube channel. We're going to jump right into the presentation. It's normally 45 minutes, but I'm going to try and do it in 30 minutes. That's all the time that I have. What you see there is the price history of Bitcoin. A little bit old. It's about, I don't know, about 3 or 4 months old before the big run-up back to 6,000. I'll need to upgrade the background. I want to go to the early days of just as Bitcoin was launched, and you can see right there that in Satoshi white paper, and people kind of misunderstand what Satoshi actually invented. And yes, it says peer-to-peer electronic cash system, but what he actually invented was mining. He invented proof of work in order to create a way to send digital data and actually lose possession of that data. He solved the double spend problem. In order to do that, he had to rely on other references. One of those was Adam Back's work of Hashcash, who is now the CEO of Blockstream, and we will talk about that a little bit later. So what was Bitcoin's first use case? How is Bitcoin economically relevant? Because this presentation is about the value proposition of Bitcoin. So the very first, I guess, commercially known use case was a suggestion in late 2010 by Amir Taki, a core developer at the time, that WikiLeaks needs to start accepting Bitcoin for donations after WikiLeaks got cut off from financing by Visa, MasterCard, and PayPal. Now, it was very early in the days of Bitcoin, and they actually decided not to do that at first, mostly because it was Bitcoin was so new, but the price speculation still made it rise to 50 cents. The second use case, hey, let's see if you guys can make that full screen, like actually full screen. Like in the upper, yep, right there, perfect. Excellent. Now, the second use case was actually the same. It's the same concept of this censorship-resistant value transfer, and that was the launch of Silk Road. Silk Road launched in February of 2011, and it was another way to send your value without any censorship in order to purchase goods or services. So while those two use cases, especially the first one, got Bitcoin on my radar, it wasn't until later on, that's Chuck Schumer telling you how to use Silk Road and how to use Tor and how to use Bitcoin. The greatest 30-second advertisement for Bitcoin in history helped drive the price all the way to $30. Now, for me personally, there was a more important use case for Bitcoin, but I didn't realize it until 2013. Once I realized that use case, that's when I started buying into Bitcoin and couldn't get enough learning about it. And that use case came from the country of Cyprus in 2013 when bank accounts were frozen and the government confiscated 50% of everyone's money above 100,000 euros. Now, that to me was and still is Bitcoin's greatest contribution to society. The fact that for the first time in human history, you can own something of value that no one with a bigger gun can take away from you. And I refer to this property as being unconfiscatable. And it's amazing how just a year ago, a little over a year ago, I was able to get the unconfiscatable.com domain. And we have a company and we have a conference called Unconfiscatable because the word didn't actually exist. Because no one had ever considered that this property could exist. And Bitcoin gives you that property. So by putting your value in Bitcoin, the fact that the system is trustless, the fact that the system is the best example of decentralization the world has ever had, allows your digital value to be unconfiscatable if it's very valuable to you. And recently on my YouTube channel, Saifedean Ammous, author of the Bitcoin Standard, we're going to get into that, debated Peter Schiff, and Peter Schiff has this view that if something doesn't have a physical form, then it's valueless. And but that's what makes Bitcoin valuable. The fact that you don't have a physical form means that nothing can be confiscated. And a great example that Peter Schiff provided to him was, well, imagine if I deleted all your personal data, all your pictures on your cell phone, all your contacts, everything in your cell phone and your computer, none of it has a physical form. It's all in digital form. How much value do you have on that? And I guess the people at CryptoLocker realized it early and were able to make so much money. In the US in 2014, law enforcement stole more money from people than burglaries. So you had a higher chance of losing more money through civil asset forfeiture. That's when a law enforcement officer basically says, I think you're going to use this money for illegal things, or you've earned this money from illegal things and I'm just going to take the money. So forfeiture outpaced burglaries. Now, your value is only unconfiscatable if you properly protect it, and that has always been a problem in Bitcoin. For example, when Silk Road was eventually shut down by the US government, they were able to confiscate 144,000 Bitcoin. Now, that is not a problem of Bitcoin, that is a problem of Bitcoin security. And several people are working on that, including Lawrence and his earlier presentation from Blockstream. So lots of people are working on it. Now, I actually like the fact that the government sold all of that in 2015 and only made $48 million, because if they waited a few years, they could have sold it for $2.4 billion. And if this article would have waited 3 more days, that would have been $4.8 billion, because the price of Bitcoin went out of control to the upside in December of 2017. Another great example of things being confiscatable when not properly protected is, of course, Mt. Gox. That was at the peak of the price bubble in 2013. And lots of interesting facts about Mt. Gox I don't really have time to get into. But let's start with Mark Karpelès bought the exchange from a man named Jeb McCaleb. He did not start it. He bought it with 80,000 missing Bitcoin he didn't know were actually missing. Here's an email exchange between the two where Jeb McCaleb is telling Mark Karpelès to try and mine the missing Bitcoin or buy them from someone who has 80,000 Bitcoin in early 2011, I'm not sure, besides Satoshi. Other crazy things like, why don't you just use a bot that Mt. Gox has? So Mt. Gox was going to be in trouble from day one. After Mark Karpelès buys it, there is a hack a few months later, and that hack is questionably traced back to Jeb McCaleb's computer. So lots of very questionable things that Mark Karpelès is now in prison for. Bubbles pop, and that's what happened in 2013. The next very interesting thing that really solidified it for me. The bear market of 2015 was very, very bad, 2014 and 2015. But something happened in the summer of 2015 that gave me all the confidence in the world that Bitcoin is here to stay and will only go up. And that was the Greek banking shutdown. The Greek banking shutdown was really, really something. For about 2 weeks, people were only allowed to withdraw 60 euros a day from the banking system. So imagine you worked your whole life, you've saved thousands, tens of thousands of dollars, maybe $100,000, and then the government tells you you can only withdraw 60 euros per day from the ATM. After they debated and worked out a little deal, they said, okay, fine. How about next week, we will only allow you to withdraw 420 euros for the whole week, but you can do it on Monday. They all ran to the ATM machine to withdraw their 420 euros. This just happened. This is 2015, guys. That's why the pictures are in color. And how exactly is that picture different from the picture over there in the right-hand corner? That is the panic in New York, 1907, one of the biggest financial panics in the US markets. It was in 1907. There was another one in 1909. Basically, the 1907 panic led to the creation of the Federal Reserve in order to try and stabilize the markets. That's how bad it was. The pictures in the middle are from Weimar, Germany. You can also see back in Germany in 1923, you would burn the money in the winter because you got more utility out of that money by burning it. Another example, 1934, same thing. When gold, during the Great Depression, and we're going to get to gold in a second, another example of burning banknotes. And here's another colorful picture from a more recent time. This is Zimbabwe in 2007 when they had their financial crisis and hyperinflation. So what are these? Well, you know what? We're going to talk about what these pictures have in common in a second. But let's focus in on 1934 and 1933 when the U.S. government decided to separate the U.S. from gold, the U.S. dollar from gold. And this is a bill signed by FDR at the time saying that under executive order of the president, I'm sure many of you have seen this since you are in this space, basically they're confiscating your gold. And if you don't submit your gold, there's up to a $10,000 penalty. $10,000 was actually worth something back in 1933, and up to 10 years imprisonment. Lots of misconception here. Now, the U.S. government obviously did not send their goons to people's houses confiscating their gold. If you happen to have gold in your safe or in your basement, you didn't turn it in, nothing really happened to you. But the majority of the people had their gold at the banks. The banks were holding the gold for them. And you had paper currency backed by that gold, and the government basically did the equivalent of a phone call to all the banks saying, hey, that gold is now ours, and we're going to issue new bills that don't rely on gold. So this brings us to the book called The Bitcoin Standard by Saifedean Ammous. How many of you have read this book? Okay, how many of you have heard of this book but haven't yet read it? All right, a few more hands should go up. I do recommend it. It's a very good book. It focuses on the history of money and then mentions Bitcoin. Let me read a few quick passages from this book where he explains what is hard money. Hard money. If people choose a hard money with a high stock-to-flow ratio as a store of value, their purchasing of it to store it would increase demand for it, causing the rise in its price, which would incentivize its producers to make more of it. But because the flow is small compared to the existing supply, even a large increase in new production is unlikely to depress the price significantly. What this means is the best money is the money that is difficult to print new money. Hard money, by taking the question of supply out of the hands of governments, would enforce everyone to be productive to society instead of seeking to get rich through fool's errand of monetary manipulation. International economic summits are convened where world leaders try to negotiate each other's acceptable currency devaluation, making the value of the currency an issue of political will. For every other money, as its value rises, those who can print more of it will print more of it. Bitcoin is the hardest money ever invented. Growth in its value cannot possibly increase its supply. All it can do is make the network more secure by creating more miners. And this makes Bitcoin fundamentally different from every other form of money. So this brings us to a quick summary. The top line isn't fitting in this chart, but it basically, above the word unconfiscatable, it says, how is Bitcoin currently competing with the world financial system? And it currently competes in, basically without competition in the following three things. It is unconfiscatable, as we see with the examples of Cyprus, and like basically anyone confiscating your money because they can. It's uncensorable. The cases of Greece where they tell you can only withdraw 20 euros a day or 60 euros a day, funding WikiLeaks, using services like Silk Road, which no longer exist because it was a centralized website. And it's uninflatable. This is the hard money property of gold. Satoshi didn't have to create it that way. He could have just stuck with the 2% annual inflation, which would have been difficult for Bitcoin to continue to rise in price. So that's how Bitcoin currently competes, and it competes pretty well, okay? And Satoshi saw this coming, where in 2010, early on, he said the nature of Bitcoin is such that once version 0.1 was released, the core design was set in stone for the rest of, for the rest of its life, basically. But this immutability property is not really a feature of the software. The software is easy to replicate, copy, and create other altcoins, as we've seen. Anyone can do it, just need a little bit of computer science background. But these properties are grounded in the economics of the currency and network and stem from the difficulty of getting every member of the network to agree and change their mind. This is this consensus system that was created. And these properties, I wrote this article like 5 years ago or something now, But these properties, while some of these properties will be seen as, wow, these are bad things, you have to realize that not every jurisdiction sees it that way. And some jurisdictions don't mind people gambling, others do. So in jurisdictions where gambling is illegal, Bitcoin is great. In jurisdictions where Bitcoin is perfectly legal and normal, may not be as useful because you don't really need Bitcoin to do those things. So where is Bitcoin still struggling, but greatly, greatly improving? And that's scalability and fungibility / privacy. So we had this big debate over block size and how is Bitcoin going to scale. Jimmy Song debated Roger on this cruise last year. I debated Roger on this cruise last year. It was a lot of fun, but it's getting tiresome. But Bitcoin is actually scaling. We have more people should be using Batch32 SegWit. Lightning's coming, Schnorr's coming. Again, Lawrence talked about it earlier. I am not really worried about Bitcoin scaling. Now, yes, the fees got out of control at one point last year, but you can see SegWit adoption. Unfortunately, not where I'd like it to be. It's still only at about 50%, but that's because some of the biggest companies in the space refuse to make Bitcoin faster and cheaper for you, like blockchain.info, one of the worst Bitcoin wallets. I really don't mind saying that. And they said they were ready for SegWit adoption in January of 2017, and they still haven't done it. Same thing goes for BitPay as well. And the one commonality a lot of these companies have is that they are funded by people who are trying to sell you fake Bitcoins in a form of Bitcoin Cash and others. Lightning is coming. The amount of nodes coming onto the system is absolutely insane. And Schnorr signatures will make things more private as well, along with more scalable. Fungibility is really important. You really want every Bitcoin to be indistinguishable from every other Bitcoin. And we do want our transactions to be more private. Right now, privacy coins like a Monero and maybe Zcash have a claim that they're more private, but that time is going to end very, very soon. You don't need privacy on the underlying layer as long as your transactions are private. That's all that really matters. So where is Bitcoin still struggling and will probably continue to struggle for a while? Well, the first one is, of course, price volatility. Bitcoin is still pretty volatile. It's not as volatile as any other project in the crypto space, but it is more volatile than traditional assets. You can see the thick red line is the volatility of Bitcoin compared to all the other major assets. It's not always the most volatile. Gold has been slightly more volatile than Bitcoin at some point. So has the stock market, so has the bond market. So it's happened before. Bitcoin's volatility is going down. You can see the red line there going down. The blue line is the euro versus the dollar. Hopefully one day we can say that the Bitcoin to dollar exchange rate is less volatile than the euro to dollar exchange rate. But the volatility of traditional fiat currencies is always a bit of an issue. Right there, again, it might be hard for you guys to see. This is a giant list of all the countries that have experienced hyperinflation this century, since 1900, basically. And this list is massive. Hyperinflation is defined as a 50% devaluation of your currency in a single month. This list is from a book. The last one in the book was Zimbabwe in 2007. I remember spending a good 3-4 days since 2007, and that's the list in blue. So there you go. Another 12 countries had managed to hit hyperinflation in the last decade, including Russia and Ukraine, and the most recent one is Turkey. And of course, we all know about Venezuela. Venezuela is the latest case of true out-of-control hyperinflation. And you can see that the government official rate is in black, and they officially admitted it, and it caught up to the black market rate. Zimbabwe had a second run at hyperinflation in 2017 after having a massive one in 2007, where their second currency that they replaced with also did the same thing. Misconception on hyperinflations, they are mostly political events. They're not the printing of money events where it doesn't really matter how much money you print as long as everyone has confidence in that money. The United States can't print money fast enough, and the US dollar continues to strengthen because all the other economies are doing a much worse job. We also had single-day crazy events in traditional fiat systems. Here is the UK, and when they had the Brexit, their currency moved 10% in a day. Not as bad as when the Swiss peg broke. That one moved 33% in a day. Bitcoin security, huge problem. People are still getting hacked. I would love to see a solution for how to protect your Bitcoin, but Bitcoin is a double-edged sword. By you being your own bank, you gotta have bank-like security and probably even better. So Bitcoin security is a big problem. Hardware wallets is currently our best solution. Multi-sig will help you as well, but Bitcoin security is still a big, big issue. All right, so where are we headed next? I think I have like maybe 5 more minutes.
Yeah.
Okay, so where are we going from here? Well, I do think that Bitcoin could be benefited by other economic shocks. The biggest economic shock that I can think of would be the breakup of the common currency, the euro, and it's been having problems for the last decades, from Cyprus to Greece to Italy. So that is a more realistic economic shock than people probably would like to believe, but if the European currency is to break up back into its former components, that would be amazing for Bitcoin, as the people in those countries would rush in. Here's a great study by Harvard Business Review about the elimination of cash. But the elimination of cash would also serve the purposes of utilizing Bitcoin. 3 main reasons governments want to eliminate cash. They can set any monetary policy they like, including negative interest rates, charge you to hold that money. All those pictures of people running to the bank to withdraw their money, that will never happen again, because if there's no cash to withdraw, no one would be running to the bank to withdraw it. If the government says you can only use 20 euros a day, you just have a little card, it's all digital. That's what they want to do. And of course, they think we're all tax evaders, and more true so in other countries, like in India, where they think that up to 45% of the government's money is missing because of the cash economy. Probably why India tried to eliminate those bills. Huge KYC AML laws. Here is France. You can't buy anything with over 1,000 euros in cash. You got to identify yourself. In the US, one of the states passed a law you can't sell like your bicycle for $20 in cash without KYCing. Germany is getting rid of the collectible market. If you have a painting worth over 100 euros, you're supposed to register it with the government. They basically want to know where everybody's money is. Quick word on people like me who are Bitcoin maximalists. Great tweet by Giacomo Zucco. Bitcoin maximalists are basically people who think Bitcoin could succeed. The other 2 extremes are the no-coiner, person that thinks that not even Bitcoin can succeed, and of course your typical Vitalik Buterin, who thinks Bitcoin is not innovative at all and that he can create a better one. Here's my chart of all of the altcoins and how I classify them. ICOs, POS, straight-up databases, and the proof-of-work coins. This is everything outside of Bitcoin. And I don't have time to get into what makes Bitcoin unique, where the word blockchain came from. Keep in mind your core developers. This is the last one. So here's an email exchange from 2001. 8 years before Bitcoin, actually. And here it is. Personally, I like the idea of Hashcash if and only if it was structured like a real currency, as opposed to simply proof of work. In the real world, you pay for resources that you use, but you need a peer-to-peer way. Of course, getting Hashcash workable as a real currency is difficult. I've thought of a scheme that would work. Coins are signed by the owner and can only be changed, signed to a different owner by the owner. Except you need a decentralized central database of all the Hashcash that's been minted. Shit. Spend twice problem. This is an attempt to actually solve the spend twice problem from 2001. Who wrote this email? This was the 15-year-old Peter Todd in an email discussion with Hal Finney, basically how to create proof-of-work mining. So all of this proof-of-stake stuff that you hear, it's basically was considered nonsense back then as well, as a real solution was being found. That's it, guys. I'll leave it here. I had a couple of more slides. This presentation is public. You can Google it under Prezi. You can't see it in the bottom right-hand corner, but this is the presentation software, Prezi, and my name. All my presentations are there. They're just pictures. And the one thing that was missing is why I don't think altcoins will succeed from proof of work, other proof of work.